Hello guys, welcome back to the channel. So it looks like Ford is predicting a down year for 2024 and its stock price is going down as a result. Now, I've talked about Ford before and I mentioned how they had a successful 2024. They saw growth in sales that signaled a return to their pre-pandemic numbers. So with that in mind, this forecast seems a little confusing. So let's dive into this right away and see what's going on. The source I'm looking into is an article from the Morningstar talking about how investors are predicting a down year for the company that may last even through 2026. And I found this interesting because, like I said, Ford did relatively well for 2024. Now, most of its success was due to the increase in electric vehicle sales, which rose by 38.8%. But their gas-powered vehicles did have an increase as well, albeit a more modest one at around 0.2%. Now, keep in mind, the actual total number is much higher for gas vehicles as they represented about 87% of all vehicle sales for Ford. I know a lot of YouTubers make videos on Ford dealership lots highlighting the glut of inventory and using that as evidence of a potential correction in the car market. Despite all the stuff they show though, the numbers for 2024 were positive, and we'll get into the details about them in a little bit, but Ford had a successful year for 2024 and there's no two ways about it. But getting into this article, it's labeled, "Here's what's pushing Ford's stock to its worst showing in 4 years." And it starts off by a quote from S&P stating, "We expect Ford Motor Company's margin expansion will be limited through 2026 due to slower than expected progress on cost reduction, high labor costs, and increasing pricing pressure." Now, I found this quote to be very interesting, especially when they say slower than expected progress on cost reduction. It's bizarre when a company like Ford that had hundreds of millions of dollars in recall and warranty related costs, more than anyone else in the industry, state that it has negative projections because of inability to cut costs at a quicker pace. Are they not worried about the recalls? Because I'm generally assuming the reason they can't cut costs as fast as they would like is because they don't want to deal with more recalls in 2025. You would think that not cutting costs as quickly as they planned would be a net positive for investors. After all, they won't have to deal with all those costs related to quality like they did in 2024. But I guess they just calculate recall risk differently, or it's just not put into the equation when they're thinking of forecasts. Now, they also mention increasing pricing pressure, which could be due to a variety of different issues, but I don't believe lack of affordability of the customers is one of them. Ford prices have been high since the pandemic, and nothing has indicated to me that they are going to cut MSRPs anytime soon. So I believe they're concerned for two other reasons. The first is the mess going on over at Stellantis with their awful sales numbers for 2024. Stellantis' glut of inventory for 2024 is putting a lot of pressure on other automakers who did sell their 2024 units, but now have to get their 2025 vehicles out to compete with the heavily incentivized Stellantis 2024 inventory. And while Stellantis vehicles are still overpriced, they are going to be a lot cheaper than the 2025 Ford and GM models, so a lot of consumers might opt for them instead. The other main pressure on prices for Ford is their own glut of 2024 inventory. Now, it's not as bad a situation as it is with Stellantis, but a lot of Ford dealers are not going to be taking in a bunch of 2025 allocations until these 2024 units start moving. So that is going to be a financial headache for Ford for 2025. Now, I believe they'll just slow down production rather than give more incentives, but regardless of what they do, it will cut into their bottom line. The article then states, "It may be too early to tell," the analyst said. "Ford's high inventory days could lead to down net pricing." Once again, in my opinion, it will be minimal. It won't affect overall price averages. They don't want to cause a price correction in the car market because, as I mentioned, Stellantis is already giving out massive discounts on previous year units. We're talking about 10 to 20% on a lot of those 2024 vehicles. So if you have multiple automakers doing it all at once, it's going to crash prices. Now, that would be great for us consumers, but it would cut heavily into their bottom line. So I highly doubt we're going to see any massive discounts on Ford vehicles for 2025. The article then goes on to quote from a guy named Narayan stating that the carmaker also faces launch cost headwinds and greater electric vehicle volumes coming at the expense of profit. The whole EV business was driven purely by greed for a lot of these traditional automakers. When you look at the prices that Ford was charging for their EVs when they were rolling them out during the pandemic, it's pretty clear that they thought it was going to be a cash cow. And instead of waiting to see how it does, they went right into mass production and ended up losing a ton of money. Now, part of the problem too was that a lot of these automakers, Ford included, got caught up in the euphoria of the pandemic market profits and thought that it would mostly continue even after things started going back to normal. This thinking was one of the main problems with their EV strategy. So now they're using the profits from ICE vehicles to cover the losses on the electric ones, which I think is misguided, to be quite frank. Now, these EVs can't really sell well at current prices. That's the main issue. They're just too high to convince the average consumer to switch over from gas cars. This also highlights the main issue with electric cars. Since they directly compete with gas vehicles, they have to make a higher profit margin on them to justify their production for a lot of these automakers. This is why most of these manufacturers refuse to make cheaper entry-level EVs. It will plummet the sales of their overpriced gas vehicles. Ironically, this undermines the whole EV business model, because in order for private and government companies to invest in EV infrastructure and charging stations and thus make EVs more appealing, there has to be a large number of EV vehicles out on the roads. But that can't happen unless EVs are cheaper for people to buy en masse. But these automakers are too profit greedy in the short term to make that long-term sacrifice, so EVs are going to remain a small market for the foreseeable future. Now, I do believe they'll grow, but it will be at a much slower pace than what they were predicting. Now, this article then states, Ford on Wednesday called for 2025 adjusted profit before interest and taxes between $7 billion and $8.5 billion, which would be down from last year's adjusted earnings before interest and taxes of $10.2 billion. It would also be weaker than Wall Street's consensus estimate of $8.3 billion. This is important to understand because it shows that they're not losing money like a lot of people on the internet would have you believe. They made $10.2 billion in profits last year. So we can talk about their inventory and we can talk about their sky-high sticker prices and recalls, but they had $10.2 billion in profits last year and are projecting about $7 to $8 billion this year. This is why prices are not coming down anytime soon. These automakers are making a ton of money even with these high prices. Now, don't get me wrong, there are a lot of dealerships that are struggling and losing money. Make no mistake about that. But ultimately, that's not going to affect the overall pricing strategy for a company doing as well as Ford is. So overall, these forecasts show me two things. One is that Ford as a business is doing relatively well. The stock price will have some rough times ahead, but the business, for the time being at least, is doing fine. The other thing that is apparent is that the management at Ford don't seem too concerned with trying to make prices more affordable for customers. Even with the inventory buildup, I don't think they believe it's an affordability issue as opposed to just a production level issue. So I don't see Ford making any price cuts unless an automaker like Stellantis starts announcing massive discounts on their vehicles. But anyways, let me know what you guys think of this article. The link to it is in the description below. And as always, if you like this video, click like and subscribe. See you guys in the next one.